Over the past few weeks, something interesting has been happening in the energy market. While most investors are still focused on big tech and AI stocks, a number of energy companies have quietly started moving higher. Some smaller oil and energy stocks are suddenly seeing huge momentum. Just look at what happened recently with Battle Line Oil, which exploded in just a few days. When moves like that begin appearing across a sector, it usually means something bigger could be developing behind the scenes. Now, here's the surprising part. There are still energy stocks trading at extremely low valuations right now. We're talking about companies with price-to-earnings ratios under 4, analysts projecting massive upside, and even a former $75 stock now trading near $2. So in today's video, we're going to break down two energy companies that could be deeply undervalued right now. And the final stock on this list is a small-cap company that most investors have probably never heard of. If you enjoy discovering small-cap opportunities before the hype begins, make sure to hit the like button and subscribe for more research like this. And just to be clear, this video is for research and educational purposes only. I'm not a financial advisor. Always do your own research before investing. All right, let's start with the first company. The first stock on the list is Plug Power, ticker symbol PLUG. Plug Power is one of the most well-known companies in the hydrogen energy industry, building technology that helps power the transition toward a hydrogen-based energy system. The company develops hydrogen fuel cells, electrolyzers, hydrogen production plants, and infrastructure for storage and delivery. In simple terms, they're trying to build the entire hydrogen ecosystem, from production all the way to power generation. Back in early 2021, excitement around hydrogen technology pushed Plug Power's stock to nearly $75 per share. Today, the stock trades around $2, which shows just how much sentiment around clean energy has cooled. But the industry itself hasn't disappeared. In fact, projections for the hydrogen economy remain extremely large. The global electrolyzer market alone is expected to grow from roughly $1.7 billion today to potentially more than $70 billion by 2030. Green hydrogen capacity is also expanding rapidly, increasing many times over the last few years. Plug Power already works with some of the largest corporations in the world. Major partners include companies like General Motors, BMW, Amazon, Walmart, and Home Depot. One of the biggest concerns investors have had about Plug Power is profitability. The company has spent years investing heavily in building its hydrogen infrastructure, but according to management, the company expects to reach gross margin neutrality in 2025, become EBITDA positive in 2026, and potentially reach full profitability later this decade. Recently, the company also announced a $132 million agreement with Stream Data Centers as part of a broader $275 million liquidity strategy designed to strengthen the balance sheet and improve operational efficiency. Plug also reported encouraging Q4 and full-year results, showing improving revenue and progress toward margin expansion. Another interesting development is leadership. Plug Power recently appointed Jose Luis Crespo as CEO, who previously served as the company's chief revenue officer and helped grow revenue from about $27 million in 2013 to more than $700 million in 2025. From a technical standpoint, the stock has recently bounced from a major long-term support level, with the next resistance level sitting significantly higher. Wall Street analysts remain divided on the stock. According to MarketBeat, the consensus price target sits around $2.73, but some analysts have issued targets as high as $7. So the question for investors becomes simple. Is Plug Power a turnaround story waiting to happen, or is the market correctly pricing in the risks? Let me know what you think in the comments. Now, let's move on to the second stock. The next company is SM Energy, ticker symbol SM.
Unlike Plug Power, this is a traditional oil and natural gas company focused on exploration and production across major U.S. energy basins. SM Energy operates in some of the highest return oil regions in the United States, including areas with strong long-term production potential. And recently, the company has been performing extremely well. The stock has climbed around 26% in the past month, even during periods when broader markets have been volatile. Financially, the company delivered a very strong 2025 performance. Key numbers include adjusted EBITDA of about $2.26 billion, net income of roughly $648 million, free cash flow exceeding $600 million. That kind of cash generation is impressive for a company trading at such a low valuation. Looking at the balance sheet, SM Energy holds about $9.2 billion in assets and roughly $4.4 billion in liabilities, giving it solid shareholder equity and financial stability. One of the most eye-catching metrics for investors is valuation. SM Energy currently trades with a price-to-earnings ratio of roughly 3.6. That is extremely low compared with the broader market. For comparison, many large companies trade with PE ratios above 20 or even 30. Despite that low valuation, the company continues to generate strong profits and free cash flow. Wall Street analysts currently have a consensus price target around $32, with some forecasts reaching as high as $49 per share. So investors have to ask themselves an important question. If a profitable company is trading at a PE ratio below 4, does that represent a major opportunity, or is the market pricing in hidden risks? Let me know your thoughts. So those are two energy companies that could be worth watching right now: Plug Power and SM Energy. Each one operates in a different part of the energy sector, but all three could benefit if energy demand continues increasing. Of course, these are not risk-free investments. Energy markets are volatile, and small-cap stocks can move quickly in both directions. But sometimes the biggest opportunities appear before the broader market starts paying attention. Now, I'm curious, which of these stocks would you choose? Plug Power? SM Energy? Let me know in the comments. And if you enjoy discovering small-cap opportunities before the hype begins, make sure to hit the like button and subscribe for more research like this. Thanks for watching, and I'll see you in the next video.